The Hedgeless Horseman here. This is my second video today. Uh, I thought I would just talk a bit about, how hard it is to be invested in this space. Because, the frustration is palpable. I think this might actually be the most frustrating correction in the juniors that I've been a part of, at least. I remember when I started buying back here, I was down 50% in 4 months. That grinded way down here before it just basically got kicked. It just turned on a dime. It felt like, and it just rocketed almost every day. Of course, what makes it even more frustrating today is the fact that the gold price is doing as well as it has. This is a short of Bear Creek Mining, which is a silver play, but I think it's a good proxy for juniors overall, even including gold juniors. And again, this is the price of gold. So you can see that Bear Creek is down here, and I would say sentiment and valuations in especially the riskiest, let's say, micro cap juniors are pretty much down here at close to multi-year bottoms. And as you can see, last time Bear Creek, except for the flash crash, gold was down here, Bear Creek was down here, gold was down here, Bear Creek down here. So obviously, there's some kind of correlation there with when the bottom is in. Now we have a bottom here, which is pretty much along the same levels as previous bottoms, and we have gold up here. That's what makes this kind of incredibly more frustrating, because you would have an easier time explaining why the juniors are so cheap if gold was down here and the business overall was crappy. That's obviously not the case today. Again, we have Newmont Mining putting in all-time highs, breaking out of a 35-year-long consolidation, which rhymes with a very profitable gold business. But the juniors are nowhere close to reflecting the actual value of the gold mining sector, which is obviously kind of fascinating, because all mines in operation today will be depleted in the future, and the juniors are the basically the supply that will be needed in order for the gold business to continue. Otherwise, gold is going to go even higher than it already is by some magnitude. So I think one second. No, just pretty much like to say that yes, I understand this is incredibly frustrating for a lot of people, and I get a lot of messages, etc., from people that have just been in the sector last 2 years. So typically, again, most people get in here, especially if they're new to sector. This is when everyone is talking about gold juniors, and probably to get a first taste of what it's like to have a ramping junior miner, because they're not going up here simply because, or especially here because the juniors became so much more valuable. No, they were driven by sentiment and momentum, and it's the most frustrating parts are the grinds. You see it typically stuff like this, and then pop, and then grind, and then actually a flush in the flash crash, then wild revaluation. And here this was a very frustrating grind. Zigzag lower drop, zigzag lower drop, zigzag lower drop, kind of a fall spike followed by a drop, and then zigzag. So basically, the more pain, the more sellers, and the more sellers, the cheaper, and the cheaper, the high, the bigger the revaluation. So I am, let's say I am very hopeful that we will have the mother of all revaluations in the junior sector. I don't know if that will be starting tomorrow. I don't know if that will start in, let's say 6 months or even a year. Regardless, it's gonna be worth the wait. Simple as that. It's gonna be worth the wait because the junior sector, which is the future supply, is pricing in that there will be no gold business in the future. And then when you think about it, it's like, okay, how on earth is the sector going to replace its depleting supplies, their depleting mines, unless they buy and put into production the assets of the juniors, etc.? Because the majors don't really do too much exploration themselves nowadays. No, we will need tons of mines in the future. And I believe that I own some of the juniors that will have those mines that are actually also good, high quality mines that will be put into production. We need to replace a lot of mines. So if you think this will go on forever because it feels like it, you're simply mistaken, unless we do asteroid mining or something like that. No, this is just an extremely frustrating bottom. Extremely frustrating bottom. And at the same time, a company doesn't change typically in a day, except for, there are, let's say, news releases, but price does. So you see constantly, like today's sell-off in juniors overall. Did the companies change? Did the tier 1 projects or tier 1 targets or tier 1 targets and tier 1 prospects, did they suddenly become less tier 1 or tier 2 because gold was down? Of course not. Of course not. They will be mines because they need to be mines in the future. Because Newmont is mining, I don't know, 2-3 million ounces of gold per year. So Newmont needs to find, let's say 2-3 million ounces every year just to stand still. And that's one gold miner. The big, the big mines in Nevada, for example, they won't last forever. The big Canadian mines won't last forever. The big African mines won't last forever. The big Australian mines won't last forever. They can, last a long time, and they can mine more lower grade stuff as price goes up, etc. But again, that's assuming price goes up. But a high margin, a good project will be a good project whether gold is 3,000 or 1,000. They will be the first on the shopping block to get bought out, like Great Bear. So no, we're literally stealing future supply right now, when future supply is probably more needed than ever, and when the commodity is close to highest price it's ever been, and the future for said commodity looks increasingly favorable. And of course that kind of the greatest opportunity, of course, has to make people go absolutely crazy. Otherwise it wouldn't be the best opportunity, because there's so incredibly few that are able to seize the best opportunity. Most people, again, they buy here and sell here. Buy here, sell here. It's very easy to sell when the opportunity is the best, because everyone screams that you should sell. Your feelings scream that you should sell. Sentiment screams that you should sell. Down here, nobody's saying buy. Almost nobody. That's a very good thing. And now it's like most people are completely disgusted with this sector. I mean, people are probably selling, leaving or whatever, when the opportunity is the largest I have ever seen. So this is like the biggest layup ever. And the only way for us to lose is if the gold mining business goes away. Otherwise, these juniors, do own projects that will become mines. And what a mine could be worth in the future, I mean, many mines are worth a lot now. I mean, there's projects out there selling for peanuts to their, relative to their NPV uh, value on paper. So now it's just it is how the markets work. Uh, you should almost be when the opportunity is the best. You should almost be a bit paranoid. That's a good sign. It's supposed to feel like they can never go up. It's supposed to be like people are so disgusted that every small uptick, let's say, gets sold off because people just want to walk away. They want to go walk away, walk away. So you have to grind away the ones that are too disgusted to even be part of the sector, who's gonna jump ship at the lows. That's simply gonna way it's gonna be. But I would say, I would argue that I don't think there are too many sellers uh, out there anymore. I mean, even Newmont is outperforming gold. I think Franco-Nevada is outperforming gold. That's obviously the big money, institutional money, big buyers. Juniors, we have the least sophisticated investors around. That's why you go from extreme undervaluation to extreme overvaluation. You won't see that typically in Newmont or Franco-Nevada. You won't see that kind of dislocation, but you will see it in the juniors. And believe me, they are absolutely incredibly dirt cheap. If the junior sector, the valuations were correct, nobody would be stupid enough to go out and look for gold because the valuation suggests that future supply is almost worthless. Whereas Newmont is suggesting that the gold business is incredibly valuable right now. Incredibly valuable. Most valuable it's been in. Yeah, well, for Newmont, it's suggesting that it's most valuable ever, and I think that also rhymes with a graph I saw by Crescat Capital about the cash flow in the business, which is at record highs, at least 2 decades highs. But that's not really what investors who buy juniors care about. Valuation is like an afterthought. You have to keep that in mind always. People typically, 95% of people don't buy juniors because they're cheap or expensive. They buy juniors based on what they think will happen tomorrow with price. Not even with the actually really companies themselves, just what's going to happen with price. So the junior sector is full of momentum traders. It's riddled with sentiment, rationality, logical thinking, like the obvious opportunity. I mean, I can't see, except maybe the oil sector. I mean, there's probably not on such a blatant price to value gap than in the junior mining sector right now. It is beyond incredible. I could not have asked for a better layup. If you think, I mean, think of it like this: the risk reward. What's the downside here? Let's say you have a dirt cheap junior. What's the worst that can happen? Of course, it can go to zero. So that's 100% loss. Okay. Would you expect all to go to 100% loss? No, because the future supply is needed more every day. Okay. So the risks are to the upside. And when you think about what's the upside potential, when you look at the valuations, you realize the upside potential in some of these juniors are easily several 100%, even 1,000% over, let's say, 1 or 2 years in some select companies, etc. So it's like in my opinion, this is a ticking time bomb to the upside. I don't know when it's gonna explode, but it will explode. So this is just when the going gets tough, the tough gets going. If you can't spot the opportunity right now, then you really have to figure out what investing is If you're a trader, that's a completely different thing. But if you're anything close to a value investor, you'll realize that this is the largest dislocation you'll probably ever see in your life when it comes to the valuation of junior miners relative to the underlying business they're actually in. This is simply incredible. And again, it doesn't matter if it's gonna take. You could wait years, easily 3 years for 100% return, and that would still be worth it. I mean, I think we're gonna do a lot better than that. But it's like, it's supposed to be hard. It's supposed to feel like shit. The only thing you can do is like really wait. I mean, again, I'm as usual. I'm keeping it simple. I'm since I saw the light and realized just how brain dead the junior sector is. I'm simply sticking to the sentiment indicator, because again, that's the, at least in the short to medium term, for the sector overall, it's sentiment. It is. I mean, of course, this junior sector is incredibly cheap here. Of course, it should be, let's say up here or something, but it isn't. Simply because sentiment is in the shitter. So it's like, to make it completely easy, it's like I have a very hands-off approach right now. I'm simply waiting for it to go back here. That's all I'm doing. And any day, if I go and look at price of gold, let's say it's down 2%, who cares? Sentiment, we're not even close to a sentiment high, and the juniors are already pricing in a gold price of who knows, 1,300 or whatever. So it's irrelevant. The for a value investor, the case is beyond clear already. This is a no-brainer sector to buy. This is the most no-brainer buy that, again, I think I will ever see in my life. So I don't care about price of gold. I don't care about what silver is doing. I just know that when, for whatever reason, the masses discover juniors again, they're gonna rip a lot higher. Because they're obviously not attracted again because of the valuation, because a moron could see the valuation gap here. So we know it's not the valuations that are driving the junior on any given day. I mean, give me $1 billion and I'll buy up all the juniors until I think the forward return is like 50% or whatever. We're way higher than that right now. So this is just a simple thing. I mean, I post this chart on Twitter now and then, just to pretty much show how brain dead and in some respects how simple this market is. It's the junior sector is so sentiment driven that you could put a stopwatch to it basically. Buy down here, wait for it to go up there, and gold could go up, down, whatever. Obviously, like we see here, it didn't matter really that gold almost hit new all-time highs. The junior sector got slaughtered, so you know that you shouldn't really be looking at gold. I mean, that's beyond obvious, because again, if the underlying value was the driver, then we wouldn't have the opportunity we have. So it's just the best risk-reward bet I've ever seen and expect to ever see. And juniors will swing down 10%, up 10% on any given day, and expect a lot of volatility, but the risks are to the upside. And it's not going to be 10% in the average junior when we reach these levels again in sentiment. So until then, it's like you can just basically pull up this chart. Let's say gold is up, juniors are up, who knows, 10-15%, and maybe they're up here. It's like, yeah, that's a long way left till we reach anywhere close to frothy conditions. So that's like the most simple, I think, and possibly one of the best advices, let's say, I can actually give, is that let go of your conception of how the market operates. Stick to picking companies that will increase this is obviously a trading sardine type, and growth companies will have uh, similar to gold here. They will have higher lows. But in terms of total sector rotation, etc., one could just stick with this, and it typically coincides with sentiment lows in the and price lows in the trading sardines typically coincide with lows in the best juniors as well. So it's like it's handy both from a micro investing timing perspective and a, let's say, macro sector perspective. Yeah, so it's like try to block out all the noise. If gold was so important for your juniors, we wouldn't be down here. So throw away the notion of like, yeah, I'm gonna guess where gold is going and then I'm gonna make money playing the juniors. Obviously, that has not worked because juniors haven't followed gold at all. But it has, it's followed sentiment, or price action creates sentiment, etc., and sentiment creates price action. So we're simply sitting in a powder keg of a sector, waiting for the explosions to happen, which will happen unless we start doing asteroid mining or whatever. So it's going to happen. It's going to be an incredible move. Then you should realize that you could be waiting. You should be happy even if it took another year. And that should also tell you that, okay, how many can do that? Obviously, almost no one. Okay, how many do you think beat the market in long term? Almost no one. So, like, I think take pride in the fact that you can, like I see it, I refuse because I know I'll be an idiot selling here. And I don't want to be an idiot. I don't want to be a sheep. I want to be a killer. I want to be able to do the best possible buys with the highest expected returns, aka be a killer. So it's about, in my opinion, it should be a bit about pride. It's like not letting the masses, their stupidity, make you do something stupid. Now I'm betting against everyone that's selling down here. And I think I'm going to kill them all. If you know what I mean. So it's like, I think it's a matter of pride, like refuse to do something irrational. And if you look at this, it is irrational to sell. And just remind yourself of what's the easiest thing to do now? Sell, well, depending on who you are. What's the rational thing to do now? Buy. What's hard to do? Buy. What's hard to do? Be patient. What's hard to do? Even if this keeps on going like this, that's going to be even harder to buy, even harder to wait, because you're going to see sectors go up all around, perhaps, and then you're going to think, this is dead money. Why would I be here? Nothing is happening. This sector is dead. No, and then boom. So who would make the most money if let's say the junior sector continues like this for another year and then goes up like this? Obviously, in hindsight, we know this is going to happen. So obviously, the one who would be a true killer would be buying, realizing that this move is coming. Would be just buying, sitting on his or her hands, buying, waiting, waiting. And everybody else who, the one who could stomach being in it up until this point sells out here, and you're buying their shares. And then someone who was a bit more mentally strong, let's say, or disciplined, he ends up selling here. You're buying him as well. So you're stronger than anyone who's selling to you. And then boom, these people who sold to you are giving away huge future returns. And they're the ones who get in here. They sell down here. And you're gonna 95% again, they're gonna underperform an index. You, the killer, you're gonna kill the index. Absolutely gonna slaughter the index. By a mile. So just keep that in mind. Do you want to be a sheep and do what, let's say, feels easy? Or do you want to be a hard-ass investor a killer who's rational, cold hard logic, realizes the stupidity of the masses, realize the opportunity, realize what is bound to happen, and make the most of it. I mean, personally, I intend. I mean, I'm a bit tempted to almost. I mean, at next sentiment high, I mean, I could more than retire. I think already, because this will be my, let's say, at least third major upswing, and it's gone well up until now. And I mean, my portfolio is close to the largest it's ever been because I've been buying almost every week. Well, at least since the last 2 years or so. Before that, I didn't have too much dry powder. So I've been buying. My ownership of the future supply has been going up, up, up. And some stores have gone well, which, increases the size of the portfolio. And if we're down here in sentiment terms now, and my portfolio is, close to all-time highs, my total portfolio, which is basically a hodl portfolio, and that's again much thanks to, lately at least, me simply buying more. So I'm happy. Let's say I'm happy with my portfolio, the amount right now. When this happens, yeah, I could probably retire and then some. So the worst thing I could do now, I think, is sell here and miss this, because this is going to be, to me, it's going to be, well, this was life changing. This was kind of life changing, and now, again, my since I've been buying, so my stock ownership in the future supply has been going up, up, up. So I have a much larger portfolio here than I had here, and especially here. And when I get that move, yeah, I'm gonna be making multiples of my portfolio back here, with every 10% move higher. So I'm looking forward to that, and you can bet your ass that I'm not gonna miss this. I'm not going to miss this next leg, especially when it's the most no-brainer opportunity I have ever seen. I mean, again, like I said before, it was hard to buy down here because the sector was shit. Here it was frustrating after a 2-year downtrend, and price of gold wasn't too high. Now it's just, hits you in the head with a hammer. It should, at least, just how incredible the price to value gap is. And of course that coincides with the most irrational. I mean, the world has pretty much gone mad. So it's like, why should one be surprised that the absolutely best opportunities you might ever comes at a time when the world is as crazy as it's ever been, and people are as crazy as they have ever been. Instant gratification, no discipline whatsoever. So I mean, the market is just a reflection of the marginal investor, and I would say that people are more impatient today than ever. Artificial assets are more overvalued than ever, and real assets are more undervalued than ever. So everything fits that you would have this kind of opportunity at a time like this if you look at the median person or the marginal investor. So everything fits. We just know that we're gonna shear them all, because we know that 95% of people don't beat an index. And I don't know about you, but I want to be a winner. I want to stick to winning. So we already know the mistake they're doing. We see the fish. We spot the fish. We know that the people selling down here are the fish, like they were every other time. And we, as the killers we are, we're buying their shares. We're buying their shares. And they walk away crying with disgust here, talking about life is unfair, etc. Meanwhile, we're confident that we've seen this movie so many times before. We know what's going to happen. We're not even anxious about it. It's frustrating, but we're not even anxious about it because it's such an obvious opportunity. And when, almost like one should feel bad for like the people that, I mean, if you're selling juniors down here, it's like you have a lot of work to do when it comes to, especially if you're a value investor or a long-term investor. I mean, if you're selling, net selling juniors down here, then it's like you get big problems, and those people will probably never beat the market ever. Because if they can't stomach themselves to buy this low, how on earth would they buy this low or this low? This is like 5 times better layup than any previous bottom. So it's like, be patient. This is pretty much set in stone. Just be diversified, because there's going to be a lot of shit and chaos going forward, and always have a base supply of physical gold and silver, etc. But we're gonna shear everyone. It's gonna be very interesting times, and yeah, we know we're gonna win. We're winners, guys. We're winners. We know we're gonna win, like we always do. Why? Because we are calm, cool, collected killers who live off of the 95% who sell down here. And we're going to be selling it to them when we come up to these levels again. This story will repeat forever. These sentiment cycles repeat forever. So be patient. Don't care about what gold is doing. Don't care about what silver is doing. Just look at, sentiment. Look at the price to value gap. It's just a matter of time. It's a ticking time bomb. It's gonna come. Try to find a hobby or something to do, because in my opinion, I could just seriously put my portfolio in autopilot and just, let's say I had someone call me that, okay, call me when, Strategic Metals and Bear Creek Mining are up to these levels again, and without looking, I'll sell everything. I can pretty much guarantee that I would have made a killing, regardless if it takes 1 or 2 or 3 years. It's gonna be worth the wait. Find something else to do. I mean, honestly, like I used to do when I played poker. If I had a bad day at the poker tables, I just sat up for a few hours extra just to study up on investing, etc. I refuse to go to bed without getting better at something. So I mean, start working out. You'll need it. It's like this is such a no-brainer. These are big moves ahead. We're not waiting for, I'm gonna wait for the 20% uptick. No. Do whatever keeps you from not going insane, and realize we're after this move. We're not after the 10% or 15%. No, we're after the major moves. We're after the 250% moves. So it might go something like this and yada yada. Doesn't matter. We're after the big moves. We're after the big money, and the big money you get from buying low and waiting. Buying low and waiting. And now I'm buying low and I'm waiting, like I did every previous bottom. So I'll keep harping on this. Pay no attention to the price of gold. Pay no attention to the price of silver. Pay attention to sentiment and the price to value gap. We have a huge margin of safety. Risk reward is incredible. Stop looking for cues that, someone sold, your favorite unit is down 5% on low volume because gold or silver is down. It's like beyond pointless. Just losers sell that. Winners buy. Killers buy. Killers are buying here. Killers were buying here, buying here, buying here. Selling up here, selling up here. So, okay, let's make a promise. Refuse to be a loser. Refuse to be a sheep. Refuse to sell low. If you want to beat this market, you have to start understanding that the market is a total irrational fool most of the time, and we've come here to basically take Mr. Market's money, or at least the marginal investors' money. Not that we have any ill will towards, you know, the ones who are selling, but that's just how it goes. I mean, you know, someone loses out and someone wins. Might as well be us, right? And of course, diversify. Uh, Diversify so you actually are a part of the move. If you have one stock or two stocks or three stocks even, I mean, anything could happen. I'm up to 40 stocks myself, somewhere maybe more actually, because this is coming. This is coming. It's just a matter of time. But I expect within 6 to, who knows, 20 months, I think I'll be up 200%, etc., and could retire if I want to. That's why I'm not, you know, I'm not going to waste the biggest layup I've ever seen. This is, you know, this is the time to go to work. Thanks for listening. Quote, not investing advice. Stay safe. Bye.